a resurgence in inflation. They think about the deficit. But I would submit, based on what we see going on in the world of technology, from venture capital now that is going to be freed up thanks to deregulation, innovation broadly freed up, especially in healthcare. I think that's probably the most misunderstood sector in terms of the impact of technology moving forward.
Hey guys, welcome to Everyday Finance. The Chief Executive Officer of ARK Invest, Cathie Wood, discusses the strategic role that Bitcoin and gold can play as potential hedges against the volatility of the market. Bitcoin's rising institutional adoption and technological backbone give it a unique long-term potential, she emphasizes, despite the fact that both assets have historically served as safe havens during times of financial stress. On the other hand, she warns that there is still a great deal of uncertainty in the environment, particularly because of the instability of the global macroeconomic system and the fluctuating monetary policy. Despite the fact that the regulatory and geopolitical environment is still in the process of evolving, Wood believes that investors should remain aware of both the potential for upside and the risks that come along with it. Let's watch the video to learn more from Cathie Wood.
Well, let's start with interest rates. I think one of the reasons for the backup in interest rates is many investors fear an explosion in spending, given all of the election year promises. To take a point of view on that, based on our knowledge of Elon Musk and Vivek Ramaswamy, we think that the Department of Government Efficiency, clever, Doge. Yes, we do think that's going to be successful. And one of the reasons is technology, especially artificial intelligence. And I think they're very serious. We're excited about the government efficiency. You know, government spending is taxation. You're either going to be taxed now, they're going to raise taxes now to defray it, or in the future, so that could be our children, or inflation. Inflation wipes away debt. It lessens the burden of debt, but it's a horribly regressive tax. So we think this deficit reduction is going to happen both because of the government efficiency moves and because we believe economic growth, once we understand what the policies are and once they are effective, I think any tax cut that they put in place has to be retroactive to the beginning of the year. Otherwise, you're going to have deferred activity. And we feel we've been in a rolling recession for the last 2 years since interest rates shot up, with housing down, autos very weak, commercial real estate very weak, capital spending now falling. The consumer is holding things up, and mostly the high-end consumer. So we've got a lot of cyclical sectors very depressed right now. And if we get clarity on these policies, then I think we will have a very strong recovery. It may take until the second half of next year, but I think if they make policies retroactive, we won't need to fall into a recession. This reminds me very much of the Reagan years, very early in my career. The biggest mistake that Reagan made was phasing in the tax cuts, and everybody waited for the lowest tax rate. So I don't think they're going to make that mistake. So we do think there will be a strong economy. And we also believe that productivity is going to be much stronger than many investors expect. Most of this is because of technologically enabled innovation. AI, of course, artificial intelligence, is the biggest catalyst to probably the biggest productivity gains we're going to see in our lifetimes. Right now, productivity growth is 2%. We think that productivity growth could go north of 4%, 5%, really going back to the 90s when we had a surge in productivity. And it could go even higher depending on the policies. productivity growth will also be an anti-inflationary force. Wages can go up 4%. If productivity is up 4%, then unit labor costs are zero. So we're very enthusiastic about that concept. And, I know a lot of people worry about a resurgence in inflation. They think about the deficit. But I would submit, based on what we see going on in the world of technology, from venture capital now that is going to be freed up thanks to deregulation, innovation broadly freed up, especially in healthcare. I think that's probably the most misunderstood sector in terms of the impact of technology moving forward.
Bullish sentiment has been reignited as a result of Bitcoin's recent rally to $95,000. And several advanced forecasting models are now predicting even more explosive growth. According to the Power Law model, which is one of the leading models, Bitcoin could reach $200,000 by the end of 2025. This model employs Metcalfe's law to analyze network expansion and user adoption, and it suggests that Bitcoin could reach this level. According to Sin's Bitcoin Quantal model, which is yet another quantitative tool, Bitcoin is currently in a transitional phase. As soon as it enters the acceleration zone, price targets that fall between $130,000 and $163,000 become more likely to be achieved. In a similar vein, analyst ABS32 anticipates that Bitcoin will follow the historical patterns of 4-year cycles, and he forecasts that it will reach a high of $200,000 by the end of 2025. These projections are gaining traction among investors who are looking for long-term upside. Gold prices have been declining, and the dollar has been weakening, both of which are factors that have traditionally been favorable for Bitcoin.
And to give you a sense of how we think about that, there are 4 criteria. We're looking at companies. Almost every company in the portfolio we view through an AI lens, because that is the most important technology platform shift in history. And so what are the 4 criteria? Each company, and because it's going to sweep throughout the knowledge worker industry, we think the productivity gains are going to be huge. And so you're going to see that in every company that focuses on AI correctly from our point of view. 4 criteria. They must have deep domain expertise. And I'll go back to healthcare again. That is an area. Biology is one of the most complicated areas in which we invest. So we are looking for companies with deep domain expertise, taking AI seriously, either hiring a Palantir or hiring their own engineers and focusing them more directly and exclusively on AI. Global distribution, either with partners. This is going to sweep through the world pretty quickly. And then the most important one after those 3 is proprietary data. Companies that have data that no one else has can create new products and services that others cannot. And so that also is very important to us. So we're not looking at AI as a few stocks as beneficiaries at all. We're looking at every company potentially benefiting. Just depends how aggressively they harness these new tools.
Is that a fair characterization?
Definitely. I also think one of the reasons for what you are saying, Liz, is that the market's multiple by historical standards is quite high, depending on the metric you use, low 20s. Mm-hmm. And so there's less room for error, shall we say, if you're looking at valuations in a historical context. Now, we believe there are going to be some transformational business models out there. We often describe Tesla as the largest AI project on Earth, and we do believe that. We describe what's going on in healthcare when it comes to AI as the most profound application of artificial intelligence, because we're going to be diagnosing cancer in stage 1 or before stage 1. Now that the convergence between sequencing technologies and AI are coming together in molecular diagnostic tests, which are effectively blood tests to figure out if we have cancer. We'll have regular blood tests and we'll diagnose cancer way earlier than we do now. And then when you add to that CRISPR gene editing, in other cases, we'll be curing diseases. So this could not happen without artificial intelligence. I think when you are talking about the companies that where investors are saying, wait a minute, you are spending hand over fist on GPUs and the cloud generally, you're talking about what many people call the Mag 6 that benefited so beautifully from the concentration that we saw in the market, or that we have seen since for I would say almost 10 years. It started 10 years ago, and it, I think, reached a crescendo recently in the so-called Mag 6. Many of them are, I mean, I know Microsoft's capital spending budget has gone from, I think, 30 to it will be 60 in 18 months, something like that. And when investors don't see the needle moving much on the top line, they say, wait a minute, what is that all about? So I understand it, because they were the biggest beneficiaries, and their valuations, or PE ratios, if you want to describe it that way, are much higher than they have been historically. And all of them got to the top of the heap in terms of this concentrated market move because they had huge cash hoards, and interest rates, at least relative to recent history, were very high. And most people thought, oh, these must be the prime beneficiaries of AI, which they may or may not be. There are two. One is transportation, so autonomous mobility of all kinds. So not just robo-taxis, but drones and air taxis. Drones, I know that Walmart is piloting a test with Zipline, which is in our venture fund. And they're trying to get packages. This is in the Dallas-Fort Worth area, trying to get packages, I think, below 8 pounds from Walmart's to homes in the Dallas-Fort Worth area, within a half hour or whatever of the order. And from our research, we believe that drone transportation of whether it's groceries or other consumer products can be transported at a much lower cost than people now understand. I think when we see this happening at scale throughout the United States, we believe that the average package could be delivered for something like 30 cents, as opposed to the delivery fees when we are getting our food now. For example, they can be as high as the food itself. That world's going to change. And it will also alleviate the congestion that we think we'll see on the roads. And it'll be increasing congestion because we think robo-taxi rides are going to fall in price. Again, the technology helping us there as well. I'm going to keep coming back to healthcare because it is the most undervalued, most inefficiently priced, and most misunderstood area of the market that's going to be impacted by all kinds of innovation. AI, I mentioned the sequencing technologies, CRISPR gene editing. We're going to see cures for disease. We're already seeing them for sickle cell disease and for beta thalassemia. CRISPR Therapeutics is just rolling that out. It's been approved. It's been reimbursed, and it's on its way. The model here is so different from the model that traditional analysts and investors have been used to, that it's just like with Tesla on autonomous taxi networks, which we have put into our model, but most analysts have not. It's the same thing with healthcare. Many healthcare analysts think that curing a disease is not going to be good business, even though it's amazing for humanity. They think that a cure is one and done, which it is with gene editing. But the old model is almost like an annuity, a regular payment monthly for that prescription out for however long the patent lasts. We believe that a cure in business terms is going to be worth 2 to, depending on the indication, as much as 20 times. It will be 2 to 20 times more valuable than a traditional medication. So stay tuned for our research. We're putting out a lot in that area because we believe it is so misunderstood.
Institutional appetite for Bitcoin is reaching new heights, as evidenced by the meteoric rise in popularity of Bitcoin exchange-traded funds, ETFs, based in the United States. These funds have recently seen weekly inflows of more than $3 billion, which can be attributed to the recent rebound in the price of Bitcoin, as well as an influx of institutional capital. This movement is being led by BlackRock's iShares Bitcoin Trust, IBIT, which currently controls more than $56 billion in assets, which is roughly equivalent to 3% of all Bitcoin that is currently in circulation. There is a possibility that within the next 10 years, IBIT will become the largest exchange-traded fund, ETF, in the world. The shifting investment landscape, in which Bitcoin is increasingly viewed as uncorrelated to traditional assets like gold or stocks, is highlighted by the significant inflows that occurred on April the 22nd and 23rd, which amounted to nearly $1 billion each day. Some analysts now anticipate extreme long-term valuations for Bitcoin that range from $500,000 to as high as $2.4 million by the year 2030. This is due to the fact that Bitcoin has increased by more than 25% since its recent drop below $75,000 and is currently trading above $94,000. These projections are based on the anticipation that institutional adoption will continue, that fiat currencies will continue to debase, and that Bitcoin will continue to play an increasingly important role as a digital store of value in the face of rising global debt and fiscal uncertainty.